Good morning, Roger here with Roger's $100,000 portfolio, $200,000 challenge with a 2-minute pre-market update. Okay, now it's time to make some money. Winners, winners, winners. When I looked at the futures this morning, that's the first thing I thought of. Looks like almost everything is up today, at least what we're looking at. Let's take a look at what we have. We have $107,533. When we started out with 100,000. We are currently holding in the account Boeing, Delta Airlines, and Sleep Number. Okay, let's take a look at our chart, and I updated it for the numbers this morning where the stock prices are starting, and we can see Delta Airlines is still number one at a potential 169%. What do I mean by that? That means that you take an initial $10,000 and invest it. If it goes back to its high year to date, now we're not going back years, we're just going year to date highs, or just before the fall at the end of February, and Delta Airlines was at 62.48. Right now they're at 23.25. They fell $39.23. So to get back up there to that previous high, Delta Airlines, it would be a 169% gain. Why do we feel like that's possible? I think within 2 to 12 months, all these are going to go back to, if not their previous highs, the closest to their previous highs. Okay, so let me back up just a little bit and let's talk about Amazon. Amazon this morning is at 21.68. Okay, their previous high was 21.85. They're only 1% off of their previous high. Okay, now it's not that Amazon is a bad company. I think Amazon's going to rule the world, and they already are as far as retail. And what we're focusing on here is where are our biggest gainers. Yes, Apple, Amazon, those are two stalwarts, something that in a normal market you want to keep in your portfolio, that you just want to have there because you know they're going to continue earning, and very successful companies. But we're looking for biggest gainers. So we want to turn our money, if we can, we want to turn $100,000 into $200,000. And how are we going to do that? It's not the typical, we're going to sit on 5 or 10% a year. There's a potential really big gains in here. Okay, so take for example Tempur-Pedic. You put $10,000 in there. If they reach their previous high, they're going to go up 121%. Okay, maybe they don't go all the way back to their previous high. Maybe they only achieve 90% of it, or more, or a little less. You get the idea. Instead of sitting in something that's going to earn you 1% or 2% or 5%, why not earn 20, 40, 50%? And really, there's winners all over the board here. At this point, Apple's at 20%. In a normal market, that would be unbelievable, right? Apple, their late February high was 327.88. You think Apple's not going to go back there? With the introduction of new iPhones, you get most people back to work and out in the economy. Most of these companies are really going to break loose and gain back most of what they lost here just before the beginning of March. Okay, so we have in our portfolio, as we said before, we have Boeing, we have Delta Airlines, and we also picked up Sleep Number yesterday. So today, the goal is, if the market dips a little bit in either one of these two stocks, I'm looking to pick these up. What are the two? They are Tempur-Pedic and Cliffs Resources. I took a peek this morning. Cliffs Resources is down in the futures. Most of the stocks are up right now at their open price at $444. If we put 10,000 in there and we wait it out a little bit, Cliffs Resources, I would say, it's going to take them 4 or 6 months to get back there to their previous high. There's a 91% gain. So our $10,000 will turn into $19,054. So you get where we're going here. So let me show you what I did out at the right margins. If I add up all of the highlighted percentages, they equal 690%. So what I did is I divided their percentage represented in this 690 to get a weighted percentage based on 100% factor. So that means is if these 6 stocks are the only stocks that I'm in, and you have a $100,000 portfolio, I would want to put this much money into each one of those stocks to weight their potential gain by the percentage of potential, okay? And then I took the stock price, I divided the stock price into these dollars and came up with this many shares. So now all I have to do, I know what my goal is today. If I'm missing any one of these, which I'm missing 3 of them, I'm going to look to buy this number of shares and represent approximately this price so I can get my 100,000 portfolio fully in. Now, do I want to really be fully in? Probably not. There's going to be some volatility there. And in normal times, what happens is the stocks normally fluctuate up and down a little bit. And you have your stocks that you always buy and hold, your Apples, Boeing, Coke, and that kind of thing. But there's always a stock that gets hammered. Some news comes out, and maybe it's not really about fundamentals, but something happened in the company. Like a few years back, Target put in these man-woman restrooms, combined restrooms, and the stock just took a dip. Well, we bought that dip because we knew that news was going to go away, and we picked up like 10% in 60 days. So you always want to have some powder dry, they say, so you can take advantage of opportunities like that. That's why you don't want 100% of your money in, because if all of your money is in and you see those opportunities pop up, just like that Target I talked about, you're not able to buy in at that dip. These days, there's just money laying all over the table right now. So the market until May 1 is going to continue to go up. It's going to have its down days, but overall it's going to continue to go up. We can really feel these investors trying to claw back their losses or to try to make those gains. They want the market to go up. But after May 1st hits, and I think a lot of people are going to go back to work, the economic devastation is going to set in. There's going to be a lot of negative news and a lot more volatility. So let's make some money here before the end of the month, I'm thinking, and let's see where we can take it, and then we'll play a different game once it comes to March 1st. All right? So that's the plan today. What's in your portfolio? Feel free to leave comments below. If you like this kind of thing and you're interested in investing your own money, I don't want a piece of your money. I don't want you to have a piece of my money. All this is a platform that we share information and we help each other make more money. And we kind of stay away from the professionals. You know how the professionals make money, right? When the market goes down, people panic sell and they go, oh, I don't want to lose my money. Nobody wants to lose their money. It doesn't matter if you have $500 or $5 million in there. And so what happens is they'll sell. And when the market goes down, it takes a big dip and then they'll sell. And this is where the professionals buy in at the low. And then over a period of time, they ride it up and they make their money. And by that time, the average investor will feel a little bit better. He's still licking his wounds his or her wounds because of the losses, but the market's up, so they feel a little more confident. So what do they buy? They buy back into the market. Well, who's selling at that point? The guy that bought it at the low. Now it's higher, so he's going to sell some of his off and retain some of those profits. And the little guy just gets punched around. And this is how the big guys make money. So hopefully between us, right, and we take a calm approach, we don't panic sell, we talk things through what's really going on in the market, and you don't buy and sell on emotion. We just take a nice, easy, calm look. We're going to miss some upside, like I missed a pretty big upside last week, my fault. But we're going to miss those. But in the end, we're still above. Our portfolio is still, 8% above. And where is the market compared to where it was at the end of February? So anyway, with that, hit the subscribe button And also hit the like button if you like this page. And there's a little bell down there if you want to get alerts for the 2-minute pre-market and aftermarket updates. Just hit that little bell, it'll pop up on your phone, and watch quick videos. So with that, we'll see you after the market closes.